Greg, I wonder how you see things like oil continuing to affect the markets and whether the character of volatility has changed over the past couple of weeks.
Well, I think we look at something like oil, and yes, there's idiosyncratic issues to do with storage, to do with the expiry, but I do view it as a red flag for the broader health of the economy. What's driven oil to capitulate so badly has just been the lack of demand, and that is something that's going to affect all risky assets. Our view is that we think equity volatility may not go back to the peaks that we saw in March, those very elevated levels, but we do think that the S&P could potentially make new lows. We don't think the worst is behind us.
And Jim, let's talk about that sort of demand issue from a different perspective. We just got IBM earnings last night, and they talked about a pause in demand from certain large customers. Most of IBM's customers are large. You see that stock down this morning, but hey, the broader markets are down too. So relatively speaking, it's not down that much. How much is that sort of signaling from IBM going to be taken just as an overall sign of what's happening to demand? Jim, do we have you?
I'm not expecting to. Yes, you should be able to have me.
Yep, go ahead.
Yep. I would say IBM's report is likely to be a map of the markets. You can overlay it pretty much across the board with a few exceptions. We did see some pretty good earnings and even guidance out of J&J last week. But in terms of the overall market, the suspension of orders coming from your customers is likely going to continue to affect businesses large, medium, small, really across the board. The question is whether or not the turnaround comes hopefully as early as the third quarter, or if the medical data remains uneven at best, whether this protracts. So right now, we certainly agree that we don't think the market is off to the races. We saw headlines just a week ago suggesting that we are entering a new bull market. We think that's putting the bull before the horns. And so we remain defensively oriented, cautious, well-diversified among not just stocks, bonds, but also cash reserves, not just on the defense, but also eventually when the medical data enables us to have greater confidence in the economic data. We look forward to going hunting at good discounted prices.
You both sound pretty darn cautious right now. And to that point, Greg, the fact that you don't feel like the worst is behind us and that we could test new lows here, what are the data points you're watching most closely over the coming days, coming weeks, and how are you counseling investors, your clients, to be positioned right now, given that fact?
Well, I think earnings season is the thing to watch.
Greg.
We had the banks report last week, and the financials really underperformed the broader market. We get a massive cross-section this week and next week of different corporates reporting from different sectors. I think the numbers themselves, the EPS beats, misses, maybe you can look through that. But I think the type of guidance that we get, what their intentions are in terms of CapEx and what that means for the broader market, what type of visibility, probably very little that they have on their own forward earnings, I think is likely to drive analysts to cut forecasts further. So I think it means that we have to remain cautious. So we've been talking to clients about quality rather than value, not necessarily chasing the underperformers, but more looking at those stocks that have robust balance sheets and are able to weather the storm and thinking about hedging portfolios.
Yeah, Jim, really quick on earnings season. I mean, we've only got 50 or so companies on the S&P in, but I mean, the average miss on earnings is 27. The average aggregate top line miss is less than 1%. Is that just a reflection of having no guidance, or I mean, what kind of lessons do you think are embedded in that?
So we think looking at any sort of guidance or earnings data, or for that matter, economic data at this juncture is like looking through a kaleidoscope rather than a telescope. It's just simply going to be confusing and confounding. Everything rests upon the medical data in terms of being able to really provide a clear path for us to be able to trust the economic and earnings data. All that said and done, I think we probably have a very difficult quarter ahead of us. That doesn't mean there aren't opportunities being minted inside of this kind of market duress. There absolutely are. And we continue to have great trust in the active managers that we invest in alongside of our clients who are experts at selectively managing not just return opportunity, but risk events.